Agora financial market strategist Alan Nuckman on all of that. Alan, what do you think of this reaction?
Well, I try and take a very complicated situation and simplify it by just focusing on the price. So if you factor out the fears and you focus on price, we got a lot of signs of stability. You talked about the stock market making a full comeback. It was really interesting the way that we sold off last week and rebounded, that even before last night, we were within 0.5% of the all-time highs. Yes, we had a flush out last night. That was more of a test and rejected these recent lows. But look at everything else. Gold had a blow off top. Oil had a blow off top. The VIX right now is at 13, and interest rates, which are a safe haven, they rallied overnight, but they're now negative. So everything is showing signs of stability.
So looking at this reaction, we're kind of back to where we were before we took out this general, which is, a Middle East that's still a mess, and a Middle East that's always volatile, but a Middle East that for the time being has kind of reined in Iran. But if oil is dissipated and we're back to earnings and we're back to fundamentals, then play this early year out for me.
Talk to me about price, because that's what's the focus, right? The markets usually have it right. What was really important is we've held this 3,200 level in the S&P. We traded between 2,800 and 3,000 from, I think it was May to October. So that targeted 3,200 on the upside. That's now a support floor. And on a weekly basis, let's look for that to hold. So you talked about the fundamentals, and next week we start with earnings. And it looks like we're going to possibly have some positive earnings growth, which we haven't had in many, many quarters. And that's going to be an amazing focus for the stock market. Continue this rally run.
All right, let's get a sense of what companies are expected to do. I know there's been a lot of optimism about earnings picking up pace. I think year over year about 8% for the year. Is it your sense that that's right? I mean, any uptick in oil prices could hurt that math a little bit, but what do you think?
Well, oil price here, we're at $60. Right. It traded between $50 and $60 for the longest time, had the breakout, and now we've come back to that base level. But let's remember, we were at $70 not so long ago in oil. So this is not a real constraint on the market. And from my opinion as a trader, higher oil prices are a sign of economic strength, and I think it'll be a positive sign that some of this global growth worry and that overhang has slowed if you can see oil prices continue to move higher, because that's a belief that the global economy is coming back. So I look at oil as a positive when it rises, and I'm looking for stocks to continue to do what they're doing. The president has a vested interest, obviously, in our stock market, and he's going to do everything he can and will do anything to keep it moving to the upside.
Well, you've been uncannily prescient on all of the above, Alan, so thank you. We hope you're right on all of that. We shall see Alan Nuckman joining us from the CME.